Okay, well, as more people filter in, I just want to welcome everyone and thank you all so much for joining Ideas 42's webinar on small dollar loans. I'm Tahan Menon, a senior behavioral designer at Ideas 42. I work in our financial health practice area where we focus on leveraging behavioral science to impact the financial health outcomes of people living with low to moderate incomes, both nationally and abroad. Today, we'll be focusing on small dollar loans, which are generally loans for relatively small amounts of money, often less than $1,000, that use cash flow underwriting, are unsecured, and that use cash flow underwriting are unsecured and repaid over multiple installments. Today, specifically, we'll be looking at the impact that these loans are having on consumers across the country, as well as discuss the experience of providers delivering these loans in Colorado and across the US. At the outset, I want to mention that our work on small dollar loans has been made possible by the generous support and partnership of the Pew Charitable Trusts, and that on this webinar in particular, we've had the privilege and really good fortune of partnering with the wonderful Colorado Office of Financial Empowerment. Over the next hour or so, we'll begin by exploring Ideas 42's research on small dollar loan customers and providers, and then we'll move towards further unpacking the provider experience in launching and delivering these loans in greater detail. We have a wonderful set of panelists on the call today, and I, for one, am really looking forward to hearing about their experiences in this space, as well as the insights that they've garnered working with small dollar loans. We'll round out the webinar, of course, with questions from you all, the attendees. To that end, you'll notice a Q&A feature available on Zoom today. Please feel free to use it to drop your questions for the panelists or for myself at any point during the webinar. I have colleagues on the call that are monitoring the chat and the Q&A. We'll get to as many of those questions as possible during the final section. Before we dive into Ideas 42's research, I did want to spend a few moments contextualizing the need or sort of expressing the renewed interest around small dollar loans. Put simply, millions of consumers across the country continue to not have immediate access to the money or liquidity that would help them manage unexpected financial challenges. This is true for even relatively small or modest sums of money. The Fed's report on economic well-being, for example, shows us that over the past 10 years, between 32 and 50% of American adults cannot cover a surprise $400 expense with cash on hand. And traditionally, when consumers have faced these challenges, they've often had to turn towards high-cost alternatives, such as payday loans or auto title loans or other alternative financial services. But we know from a variety of sources that this is a deeply unsatisfying experience for most of those consumers. We also know that those same consumers want better options and have voiced support for small dollar lending from their existing financial institutions, from the banks at which they already have checkings and savings accounts, from the credit unions that they have a long established relationship with. Unfortunately, the situation today is quite different, with 6 of the 8 largest banks in the country offering small dollar loans, while credit unions continue to increase their small dollar loan volumes year on year. We also know that many banks and credit unions are currently considering or weighing up whether or not they want to offer a small dollar loan at their institution. I know many of you are in that situation on the call today. When banks and credit unions talk to us about potentially offering their own small dollar loan, they're often asking us 2 questions. They're asking us about the effects that wider access to bank and credit union small dollar loans are having on consumers' broader financial situations, and the impact of delivering loans on the providers themselves. I'll spend the rest of this presentation shedding just a little light on some of these questions. Over 2023 and 2024, we were able to conduct research with small dollar loan borrowers and spoke to a series of providers and stakeholders on their experience in this space. On the consumer side, we conducted qualitative and quantitative research with Save Our Life, a nonprofit and advocacy organization using technology to improve the financial health of people living on low to moderate incomes. We sent a screener survey to begin with to Save Our Life members that had used a small dollar loan in the past, and we then conducted a series of qualitative interviews with 13 of those borrowers. Finally, we worked with Saver Life to evaluate the transaction data for about 125 borrowers, looking for some broader quantitative insights this time. And to understand the experience of providers or the provider side of the equation, we spoke to 9 financial institutions and 10 regulator and stakeholder groups. I'm going to draw from these sources to share some of our research insights on on the next couple of slides, but I'm only going to share a really small selection of insights, really to whet our appetite for the extended panel discussion to follow. If you would like to dive deeper into some of our insights, please do look into the memos and reports that my colleagues should be dropping into the chat imminently. All right, let's dive into the research. From the screener, we learned that a majority of borrowers, perhaps unsurprisingly, were seeking a small dollar loan because they had experienced an unexpected expense of some kind. Some respondents also mentioned to us that they either regularly had insufficient income or had experienced an income side shock of some kind. Now, while these reasons illustrate the need to borrow, our qualitative research also shed some light on why consumers were turning towards small dollar loans as opposed to some of their alternatives to meet their needs or borrowing needs. Borrowers, to begin with, largely without exception, mentioned the affordability of their bank offered loan, with prices comparing favorably to many of their alternatives. Relatedly, borrowers also appreciated the smaller monthly payments and the longer runway to pay off their loans, finding repayment to be a lot less stressful than when subtypes of advanced products and for those with balloon payments. And finally, borrowers also found accessing or applying for small dollar loans to be really straightforward. They received funds quickly and were rarely surprised by hidden terms or other features of the loan. In sort of behavioral design speak, the user experience with small dollar loans was really straightforward, a really great experience. Another question that stakeholders often asked us during our research was whether or not small dollar loan consumers were substituting away from high cost alternative financial services and to small dollar loans. We attempted to sort of begin answering this question a couple of different ways. On our screener, we asked borrowers who had used an alternative product in the past if they had since stopped or modified their way of using that product after gaining access to the small dollar loan. On the high cost non bank loans, which I think most people are paying attention to, while 1 out of 3 screener participants had used such a loan in the past year, 3 or 5, or about 60% of them, have since stopped using these products after their small dollar loan. Now, while this result comes from a screener of borrowers without a comparison group and that do not necessarily represent the broader population of small dollar loan borrowers, it does tentatively indicate to us that indeed some borrowers are substituting their high cost products for bank offered small dollar loans. And from our transaction analysis, we also found that borrowers were paying less in financial fees on average after they had taken out a small dollar loan. This was true for overdraft, non-sufficient funds, and other related fees. Now, while these results were not statistically significant given certain aspects of our sample, they again provide further impetus for broader and more sustained research into the effects of small dollar loans on financial health. And to wrap things up, on the provider experience, 5 main headlines came out of our conversations. In general, small dollar loan providers are experiencing really healthy uptake, with the NCUA, for example, continuing to report rises in small dollar lending volume with a 30% increase in volume between 2019 and 2022. Providers are also exceeding expectations around repayments, and loss ratios are a lot lower than many had initially anticipated. One very seasoned bank provider mentioned to us that they were also really surprised by how highly customers were prioritizing their small dollar loan repayments relative to his, as well as I think the field's conventional expectations around repayment hierarchies or who gets paid first. And we also saw this in our research, where borrowers mentioned to us that they wanted to pay off their small dollar loans early so that they would maintain access to the loan during any future emergency. And I think part of this, again, was just how easy these loans were to access when crisis did strike. Some providers also mentioned to us the role that the product could play in retention efforts, especially for that category of customers that are attracted to fintech products. And finally, technology upgrades and legacy systems did crop up as a challenge with some of the providers that we spoke to, especially when it comes to rolling out such a consumer-friendly product. But for most of those providers, the challenge was largely surmountable, either with sort of extended timelines or in partnership with software as a service firms. So this slide wraps up our presentation on Ideas 42's research. But before we turn to the panelists, I do want to mention again that this presentation captures only a portion of our work. So please do dig into the memo or reach out to us to learn more. All right, let's turn to the panelists. I think we'll begin with a round of introductions. I'll just ask the panelists to introduce themselves, their company or institution, product, and maybe give a brief overview of their institution's work on small dollar loans. We'll start with Cody and then go from there.
So my name is Cody Ward. I'm a product manager here at Huntington Bank in Columbus, Ohio. And I manage our small dollar lending product, Standby Cash, which we launched in 2021. Well, we call this like our digital first line of credit. I think what's kind of unique about it is we base our underwriting off of the customer's deposit checking relationship rather than using traditional credit underwriting. And this allows customers with low to no credit to access the product, and they can use it both from an opportunity to get some emergency liquidity, as well as to kind of help build that credit to where they can then kind of graduate into more traditional credit products like credit cards.
Thanks so much, Cody. Kristen, you're up.
Hi, so I'm Kristen Roche. I'm the VP of Client Success here at QCash Financial. And we are a QSO that really just seeks to deliver innovative small dollar loan solutions to our credit union partners, really to strengthen the well-being of their communities. We offer a relationship-based small dollar lending solution and really seek to be the premier partner in that and offer that automated lending platform with underwriting and technical expertise. And currently work with over 160 credit union partners across the country. So I'm excited to be here.
Thanks so much, Kristen. Nathan?
Hi, good afternoon. Thank you all for joining today. My name is Nathan Cape. I'm the CEO of Minnequa Works Credit Union. We're based in southern Colorado, about 2 hours south of Denver in the Pueblo area. We serve a little over 12,000 members, and we're considered what's called a low-income designated credit union, meaning a lot of our membership field and membership base would qualify under what's called low-income designation. And so we've created a product called CashWorks that actually goes in line with the QCash product that Kristen mentioned. And so CashWorks is designed as a small dollar loan product that's relationship based rather than the traditional credit score modeling, and gives us an opportunity to look at new ways to help provide loans to our members and feed that helping people movement of credit unions.
And last but certainly not least, Rainey.
Good morning, everyone. I guess it's afternoon now, but I'm Rainey Thone with Community Choice Credit Union, also in Colorado, and we are just outside of Denver, Colorado. So we're just a little bit north of Nate's Credit Union. We also have our low-income designation, and we are a CDFI and Juntos Avanzamos designated credit union. So our focus has really been on the underserved market in the credit union space. We have about 6,500 members and 100 million in assets. We have worked for many years with how to make the small dollar loan work really well for our members. We wanted something that was 24/7 and that could be a quick process and efficient for our team. And so last year we launched the QCash program, and we call it Your Choice Loan. And it's been amazingly popular with our members, and our employees love it because it frees their time up to help with other services needed. So we're excited to be here, and thank you for having us.
Thanks so much, Rainey, and thanks so much to our panelists for joining us. I'm actually going to begin, somewhat chronologically and ask our panelists some questions about how they and their institutions launched their small dollar loan products or about some of their initial work in this space. So this is a question for both Nathan and Rainey. Both of your credit unions, as you mentioned, started to offer small dollar loans late last year. What led you to do so at your respective credit unions? I'd love to hear from you first, Rainey.
Thank you. So, we are really close to our members and we listen to their needs. And we had a lot of people coming in telling us that, they needed help. And sometimes the loan was just a few $100s. And so we started tracking, this request to see what was really going on. And we found that a lot of our lending team was spending a great amount of time processing these loans. And, we all know emergencies happen 24/7. So we felt like there was probably even a bigger part of our membership that we weren't reaching because, of the process that we had. So we wanted to explore what we could do to make it efficient and fast for our members and, to provide them an opportunity to cover these emergencies without a tremendous amount of fees or high interest rates. And so that's kind of where we started exploring what else could we do to be a better partner for our community. And that led us down the road of looking at doing it ourselves. How could we, partner with someone or what our other options were. And that's what led us to the QCash program.
Nathan, does that resonate for you? Are there other reasons as well behind Minnequa Works' decision to offer a product?
Yeah, I mean, that resonates entirely. A lot of the different ways that we were looking at this from the Minnequa work side of things, Rainey touched on some great points there that they considered. And really kind of, I think our journey to small dollar loans really started a couple of years ago, more so in terms of looking at, what are different ways that we're making an impact in the community and impact with our members. Our journey kind of started along the checking account route a couple of years ago in 2023. We created what's called an overtime checking, which is bank on certified. So basically meaning that it eliminates overdraft fees and it's more accessible to more members in the community in different ways. And that got us engaged with other community partners like the United Way of Pueblo County and surrounding counties in the Pueblo area. And from that, similar to kind of what Rainey had mentioned, we saw a lot of smaller dollar loan requests, members that are interested in establishing credit or rebuilding credit that tied along with that bank on certified account. And the QCash product in terms of something that was available 24/7. We have a lot of steel workers in our area, members that might be looking for account access outside of the normal 8 to 5 and having something that's accessible to them, in the palm of their hand to be able to do an application and walk through that process fit alongside our service delivery channels very well. And it kind of started to meet that need there. So from our board standpoint and our strategic standpoint in terms of looking, saying how can we make an impact and kind of go back to our roots of, the credit union movement standpoint of that people helping people aspect, that small dollar loan, fit right in terms of that plan and kind of helping to look at different ways to help not only serve the need, but do it in a way that is more efficient and looked beyond a traditional credit score modeling to try and help serve more of our members. And more of an outreach for various reasons.
Great, thank you. That's really helpful context from both of you about the evolution of both of your institutions' journey towards launching the product. Nathan, I'm actually going to stick with you for this next question. The 2020 joint guidance on small dollar loans at the federal level provided a lot of regulatory clarity for banks and credit unions that are looking to serve their customers with small dollar loans or lines of credit. What else do you think national as well as state regulators could do to encourage more credit unions to launch small dollar loan products or to make small dollar loan products more widely available within existing institutions? I'll ask you, of course, to consider your context in Colorado, but feel free to widen your aperture and take a broader look as well if you'd like.
Yeah, I think, overall from our standpoint in Colorado, Department of Regulatory Agencies and NCOA guidance, things like that, I think it's overall been developed pretty well. From our standpoint at Minnequa Works, partnering with another resource like QCash or others that kind of have that expertise in the field, that was, I think, very valuable for us just to kind of help walk alongside the process and really kind of take partners in understanding, okay, well, what does a regulator look at in terms of the standpoints of a small dollar loan? That was kind of like one of the first steps for us is, kind of taking a partner in it from that standpoint. But beyond that, one of the ways that I think we learned through in our policy process and even kind of, what you might see with internal auditors and kind of filling through, regulation side of things is how does your policy align to basically underwriting? So for a lot of credit unions or financial institutions that may be considering AI or other types of practices, a small dollar loan program, kind of what we've involved here in Minnequa Works, where it has an automated underwriting process that's attached to it. I think that was one of the biggest learnings that we took away from it in terms of saying, okay, well, how does your policy still take into account, governance within the credit union, safety and soundness within the credit union, and identifying, okay, well, how do our parameters that we're setting up with a relationship-based lending platform and things of that nature, how can we align that and still take into account, underwriting or risk criteria, but feed it into a process that really serves the underserved or serves members in a way that's automated. So I think that balance there was one of actually the bigger takeaways that we had in terms of saying, okay, how does our policy relate to this and ensuring that, the board of directors is having to have that buy-in from it, the understanding of how this works, potential risk factors involved, and aligning that into policy. And I think once we're able to kind of bridge those two aspects together, it made it work overall pretty seamlessly for us, and a really positive experience.
Thanks, Nathan. Yeah, and I think some of what you said really resonates with some of our conversations with regulators as well. It's interesting that you mentioned Bank On and that checking account as part of the journey towards launching a small dollar loan. Certainly from a lot of regulators, we see, or they, I think, see a potential for these loans as part of a broader strategy aimed at financial inclusion. Kristen, I'm going to turn to you now. QCash Financial works with a number of credit unions. Two of them are on the call who are looking to offer small dollar loans both across the country as well as in Colorado. What are some of the top reasons that credit unions mention when they come to you looking to offer a small dollar product?
Yeah, so this really goes right along with what Rainey and Nathan said. They're great QCash partners, and we enjoy working with them and assisting their membership. But really, the credit unions that we work with, they're looking for opportunities to meet their members' needs in a fast and efficient manner. Most of the credit unions that I work with, they've noticed that they may not be meeting the needs of their particular membership and the needs of their community. They have members that they don't qualify for the traditional lending. And those credit unions, they're having to say no to those members that they don't fit into that traditional lending box. They maybe don't have a credit score or they've had past credit issues. And with that, those members may be coming to the credit union and the credit union they have to say no. Those members, they need assistance, so they're turning elsewhere. So we're working with credit unions that, they're looking for alternatives and ways to assist their members and bring them back into the credit union. They want an affordable way to offer small dollar loans that they don't tax on credit union resources. They don't necessarily have the staffing to offer this type of product in-house. And that goes for both technical resources to build the product and then, the lending resources to maintain the product. As I believe Rainey said earlier, with just having the staff available to work those types of loans. These loans are also typically, you have to underwrite them differently. They're not your typical consumer loan product. And some of the clients that we work with, as Nathan mentioned, they may not have the expertise in that area and need assistance and partnership there. So at QCash, we've got the ability to partner with our clients on a fully automated option for their members. It's available 24/7. So it's available, anytime, anywhere, and we like to say from any device. and it doesn't require credit union employee intervention. So member can receive their funds when they need it in less than 60 seconds. And we do that without pulling a credit report. So we work with a lot of credit union clients that they realize the benefits of that, and they're looking for those alternatives for their particular membership.
Gotcha. Thank you. That's really interesting. I think we've heard similar themes from some similar institutions like Velocity that work a little bit more with the banks. Something, we often hear from providers about mission and customer centric reasons to enter the space. But I think we've also been surprised by just how many sort of providers also mention things around business case and sustainability, including retention and stuff like that. I do want to take a step back for a moment, though, and this is for you, Cody. When thinking about sort of small dollar liquidity writ large, from fintech lenders and the various offerings that they provide to cash advance products and others, there's really a dizzying number of players as well as products out in the market that are seeking to serve that same customer need for accessible liquidity. Cody, what do you see as some of the main differentiating factors and benefits for launching a small dollar loan in this crowded market? Both thinking about the alternatives that your consumers have, but also the alternatives or options that you had when Huntington was thinking about meeting that customer need.
Yeah. So I think one of the things we think about is as differentiating for Huntington and in the space that we play in is that we can offer a program like this, a small dollar lending line of credit that's providing access to liquidity for these customers at a reasonable price, within the friendly confines of their trusted financial institution. They've already got a relationship with the bank, and so they can go to that familiar place to get access to liquidity, and it can be safer for customers than having to go to alternatives, especially before we had more access in this space when they were having to go to payday lenders. They can go to their bank instead. So I think that's a big piece of it. That's a differentiator for us. I think when you think about the product itself and what makes it good for the customer and what makes the customer want to come to you, it's again that access. So and the way we've been talking about with the credit unions and QCash is like when we're basing this off of a deposit relationship rather than more traditional credit metrics. It's just providing again that access for customers, especially that are typically underserved, low credit, no credit, low income customers, providing them again that trusted place that they can go to for the liquidity.
Appreciate that, Cody. One of the big questions from banks and credit unions for us is around the impact of small dollar loans on the businesses and institutions that are delivering them. So I'm going to sort of turn to that now and ask our panelists some questions that get at that broader question, as I know that many of you that are on the call today work at a bank or a credit union or other financial institutions and are sort of weighing up what kind of impact offering these loans have on your business. So Cody, sort of starting with you, sticking with you, a question that a lot of providers have, as I've just been mentioning, is around the business case and sustainability of small dollar loans. Could you share a little bit about how you think about the business case for standby cash within your institution, thinking about it both at the time in which you launched the product, as well as what you've learned along the way?
Definitely. I would say our main takeaway was to it's probably better to start conservative with eligibility criteria and expand outward than to have to go kind of the other way around. I think when we business case this, there were a lot of open questions about what the demand would look like, and we probably underestimated that a little bit, which is understandable and great. And I think the other piece of it from a business case standpoint would be the importance of trying to find a way to attach some direct revenue to it. I think like we launched an advance fee for the product early last year. still see great demand for and usage in the product. But I think it also hit at this idea, one, from a bank standpoint, attaching revenue is important to be able to expand and invest in the product and be able to offer it to a wider array of customers. And also there was this idea that like customers get skeptical and trying to figure out where the gotcha is if you're offering a completely free product. So just this idea of having like a little bit of a price attached to it kind of makes them understand like or get over that hurdle. I think from a benefit standpoint to the bank beyond the economics, if you can find a good way to price it, is there are those acquisition and retention benefits. We do see customers that utilize our product, the Standby Cash product, that have in general a higher household average balance than some of our other customers. There's obviously the reputational aspect of it, where we can can be proud to say that we offer the product to customers and have another way for them to have an alternative form of easy to access liquidity. And from the economic standpoint, just kind of the last point I'd make is just that it's getting harder and harder in our regulatory environment to find new income streams for the bank. So one where you can kind of, I think, provide a win-win solution both for customers and the bank here is a great one.
It's really interesting. I think the point you made about customers being surprised or sort of thinking there was a catch with a product that didn't have a fee, that showed up in a lot of our qualitative research. People were just really surprised that there was such a great product and how it was priced. There was definitely a lot of appetite for prices to go up a little bit. And I think especially given just what the alternatives are out there and how expensive those alternatives are. Rainey, how do you think about the long-term sustainability and business case for your small dollar loan at Community Choice?
We've started really analyzing this opportunity because when we first started, we weren't sure what the volume would be and how members would utilize this service. And over the past 12 months, we've just seen it continue to grow. And so that alone is helping us to realize the importance of having this product and to continue to build the awareness in our communities that we do have something that is quick and easy and is affordable. And that we also experienced what Cody mentioned, and we went through at the very beginning of our time, and we went through our list with our members that were starting to apply, but then they would back out of it. And I think they thought it was too good to be true, that there were other opportunities for them that weren't charging them fees and high interest rates and things like that. So I think when you look from a credit union perspective, what your vision is that you want to create for your members, and one of our goals is to really help members achieve financial security, to help them understand the power of their credit score in all aspects of their life, that sometimes you have to just start somewhere. And this really helps people to realize that I can make a difference and I can do great things. And we're starting to bring members in to talk to them about their credit score and to help them with other products and services. And it's just been so well received. We're so excited to see what else we can do in our next chapter of this program.
Thanks, Rainey. Nathan, I've got to get your take on this as well. How do you see this question for Minnequa Works?
Yeah, well, when you phrase the question about business use, I think a couple different things come to mind. There's an indirect way, there's a direct way to look at it. We're thinking about business use in terms of direct way, in terms of looking actually at business organizations that might be part of the credit union or bank, things of that nature. Similar to, I think, what Cody and Rainey had mentioned, at Minnequa Works Credit Union, we focus primarily on consumer-based. However, we continue to look at different ways of how we can, reach a greater impact moving forward into the future. However, an indirect business aspect in terms of business use case as well, when you look at the amount of small dollar loans that have been approved at a broader scale, that's a direct impact towards local economies, right? So that might have been a loan that might not have otherwise been approved, or a resource that was available to a member and a consumer that's in the area. And that's directly making an impact to small businesses, organizations, and the community. From a sustainability and a business use case directly within the credit union as well, I think it ties back to, not only helping to provide a tremendous service to the members that are applying for this and utilizing the product, but it's also, a greater scale of efficiency, right? In terms of the amount of time that it takes them to go through an application process and an approval with a small dollar loan. Whereas if they were taking that same time or that same application with an in-person loan officer, there's tremendous value to that, but that's also going to take greater time, and that's time taken away from that loan officer or that department that might be, better utilized to do another loan option or something else. So when we're looking at a business use case, even if a credit union or bank isn't considering doing a small dollar loan directly for a business entrepreneur or small business owner, things of that nature, there are other tremendous uses and side benefits that can come off from a small dollar loan product. And that's some things that we've seen here at Minnequa Works.
Thanks, Nathan. Before I turn to you, Kristen, just want to remind attendees, I already see some questions coming through, both on the chat and Q&A. Please feel free to drop any of your questions for the attendees on there, and we'll get to those shortly. Kristen, something we've heard from institutions who don't yet have a small dollar product is around the difficulty involved. And I think some of our panelists have already mentioned this, involved in sort of managing the costs and technology development associated with a product launch. What kind of role can organizations like QCash play in helping make that process easier and more affordable? And then also, what kinds of credit unions? Are there any differences among the credit unions that you're working with? Are there any limitations, that sort of thing?
Sure. No, that's a great question. And unfortunately, it can be very expensive, offering this type of loan program. And unfortunately, for many credit unions, offering small dollar loans, it can be cost prohibitive. As Nathan and Rainey said, the technical resources that are needed to establish this type of program. It requires a great deal of staffing when you're doing this type of program in-house in order to develop and maintain the program, and then people to offer that program. It requires a great deal of lending resources and credit union resources to offer that, and it can get very expensive. For most credit unions that we work with that do offer this program manually in-house, they're spending the same amount of time on a $300 loan as they are on a $35,000 auto loan. And that's very, very expensive and cost prohibitive. With QCash, we've got the economies of scale and the core integration from working with our other credit union clients. Like I mentioned earlier, we currently partner with over 160 clients across the country that offer this small dollar loan program. It doesn't require, the research and development to build a new loan program. I come from the credit union industry where, when you're going to launch a new loan program, that's a very extensive process as far as, research and development and deciding what it should look like and the regulations associated with that. And, it has to look completely different. But we've got, our tried and true program implementation process and program underwriting partnership where we work with our credit unions to offer this small dollar loan program that is specific to them and to their member needs. Every credit union that we work with is different. Their goals are different. The reasons that they're offering this program are different. And then their membership looks different. So we don't take that cookie cutter approach. We really get to know our clients and partner with them on the best approach in order to meet their needs and their members' needs. The program that we offer, as I've mentioned, it's a small dollar loan program that from the time the member clicks the application link to the time that they receive funding to their account, if they're approved, that entire process is less than 60 seconds, and it requires zero interaction with credit union employees. So it's fully automated. So as Rainey mentioned earlier, it's not those credit union employees that are originating the application, doing the underwriting, sending loan documents if that's required, and then funding the loan. So we've removed that entire element from the process and offer this option for credit union members. We also have free member awareness materials that are available to our clients, where the credit unions can simply just drop their logo into that marketing material and requires zero development by their marketing team. I think that's something that's kind of often forgotten and is in the background when credit unions are considering offering a small dollar loan. Your members can't take advantage of the program if they're unaware of the program. So having that marketing material and those member awareness campaigns, that's important, and it's expensive. So with this, much more cost-effective option for our credit unions and their members that we work with. And usually for the credit unions that we work with, this is by far their most profitable loan product. Your members are going elsewhere, and they're using a much more expensive option. So I sometimes tell folks, can you afford not to offer this alternative to your members? You did ask about the credit unions that we work with. We work with credit unions from Florida all the way to Alaska. And from credit unions that are, 30 million in assets all the way up to over 7 billion in assets. And like I said, we really pride ourselves in getting to know our credit union clients and consider ourselves a part of their team and want to make their program successful for them, whatever their goals are.
Thanks, Kristen. Yeah, I think certainly one of the not so much misconceptions, but I think people there's so many good reasons to offer small dollar loans because of the impact on consumers. Some of our research points to that. I think there's a lot of that information, I think, that is on there online and that's been shared. I think the point that you made about this being one of the more profitable loans at the institutions that you're working with, that's more surprising, I think, to people. I think there's less of that information out there. And it really is, as Cody said, can be a win-win for both the providers as well as the consumers at credit unions and at banks. I'm actually going to stick with you, Kristen, for some broader perspective on the market as a whole. Something that consumer advocates especially have had questions for us about or around is the scale and reach of small dollar loan products when looking at it at a more macro level. What prospects for growth do you see for small dollar loans, both in terms of the number of institutions offering these loans, as well as the scale of products at existing institutions?
Sure. Yeah, in my work with credit unions across the country, I think there's significant opportunity for growth in this area. Predatory lenders, they charge just such exorbitant fees to borrowers with annual interest rates typically in the triple digits, which it baffles me. And research shows that these types of loans, they typically lead to that continuous cycle of debt. Where members, they get in that cycle and they cannot get out of it with the fees and the rates that are charged. Research shows over 12 million Americans turn to payday lenders every year. And those are members of our community using those financial resources when their needs arise. Research also shows that about 81% of payday loan users prefer to borrow from their bank or credit union if their bank or credit union offered that type of product. So my thought on that is if we can provide a small dollar loan offering that is there to meet the needs of our members and can bring them back into the comfort of their credit union or bank, when life happens, I think that we'll just continue to see that grow.
Absolutely. That's, Kristen, you're doing my job for me. You're giving me a pretty natural segue into sort of the next sort of broad theme I want to get into before we get into some of the questions from attendees. And that's really around turning away from impacts of these loans on providers and onto what the impacts on consumers are. we've gotten questions always a lot of times about the profiles of small dollar loan borrowers. Cody, can you share a bit more about the backgrounds of the clients who are taking out small dollar lines of credit, such as standby cash? Who are these borrowers? Why are they taking out these loans? Are there any surprising profiles that have come up for you as well?
So I would say when we look at it from a qualitative standpoint with the feedback that customers leave, we see a lot of folks using standby cash in the ways that you might expect them to. They're using them for emergency purposes. Around the holidays, I saw a lot of comments about being able to use them to help with the buying presents around the holidays. You do see them using it to avoid overdrawing their account or to avoid overdraft fees in general. So that's kind of the typical what you would expect to kind of see, I think, with this product. As far as the profile of customers, broadly speaking, we see that they're especially given that the product is a digital first in nature. We do see that they're younger. They skew younger than our overall portfolio. And then have typically lower balances, lower income, lower credit scores on average. Not anything too surprising there. I think what's most surprising from a interest standpoint is when we've done qualitative research and kind of stack ranked some concepts together. Concepts maybe that we were thinking about offering, but also including some that we already do as kind of a benchmark. We do see that there, in addition to the mass market, low income customers that would be interested in the product, we also see the more mass affluent customers interested in a product like this. That's no interest if you're signed up for auto pay, a small advance fee. Where if you structure it right with the right line amounts available for some of those customers, that they would also be very, very much interested in it, which I thought was a little surprising.
Yeah, absolutely. Nathan or Rainey, either of you want to add some more context thinking about Colorado specifically and the reception to your product there? Now I'll pick on. There you go, Nathan. You can go.
I'll start just in terms of overall reception that we've seen in terms of our loan products. So again, we launched in late part of the first quarter of last year, so we're going on almost a year now in terms of our product being available to membership. And over the course of the last year, we've seen a little over 130 loans approved in terms of our standpoint, and we see a kind of a full spectrum in terms of applicants. We see applicants that are A+ credit score tier all the way down to no credit score tier. However, we have seen kind of a more of an active use in terms of credit score ranges. When that criteria comes over, the average is about 610 in terms of our average credit score rating that we're seeing. So a lot of no scores coming through, a lot of lower credit score tiers, and really kind of showing the ability to have this product, that relationship model where it was designed for, and helping to support that membership, but seeing a full scale of members that are really kind of taking this into part of their weekly process, monthly budgeting, whatever it might be, to be able to have that utilization. So we are seeing that, and it's steadily increasing as more knowledge and awareness comes available for the product and the service, and how it's a differentiator for maybe some of those other high cost alternatives that they might have previously sought after, or other options. So I think it's been a building block over the last year, and we're kind of building momentum around it even more so now, and really looking forward to seeing how that engagement will continue.
Rainey, I have another sort of related question here, something that a lot of borrowers actually mentioned to us during our qualitative research, is that they would like to see a relationship between their small dollar loan and building credit. In part, I think it was because some want to graduate towards other credit products after their small dollar loan. What role do you see for small dollar loans at your institution in that regard?
We see this as a great opportunity to open the door for those conversations. We've already experienced members coming in that had no credit score, like Cody and Nate have mentioned, or very low credit scores, wanting to know what they can do. And, they were more willing to talk to us because we had approved that loan. So they wanted to see what other opportunities they have. We have 2 individuals that we're currently working with that want to be first-time home buyers, and they've asked us what steps they need to take to achieve this dream. And so I think that giving them, from our perspective, giving them that small dollar loan made them feel comfortable in asking us those questions. So it really helped us to open the door to start having those conversations of how you can change your financial position and move forward with your goals. And that's been one of our greatest challenges, is how to open those doors and have those conversations. And we feel like this is a great product that's going to lead us to even more conversations. We currently have done 250 small dollar loans, and that's just in the last year. And so we feel that there's a great opportunity to help our communities and our members with improving their credit scores, helping them to achieve their financial dreams, just by making that first step of giving them a chance with a loan.
Thanks, Rainey. I can't remember if it was you or someone else that told me that often the small dollar loan is the first yes that some consumers, some customers are getting at their bank or credit union. That can be quite a powerful moment for many folks, especially because I think this product isn't earmarked for just sort of one type of customer profile. Cody mentioned sort of how popular it is with mass affluent customers. So to get that yes, I think, from a financial institution for the first time is a really big deal. We're sort of reaching the end of our webinar, so I do want to turn towards some audience questions. Apologies if I don't ask all of these questions sort of verbatim. I'm going to combine a couple of them. There's a few questions around challenges, essentially. So challenges around launching a small dollar loan product, as well as with its ongoing management. Maybe I'll start with you, Cody. When thinking about launching Standby Cash and managing it, what has been some of the major learnings or challenges that the product has gone through, and how have you navigated those?
So I guess from a launch standpoint and considerations, I think it's been kind of hit on a little bit. The more you can do to automate upfront and kind of get that aspect of it into where you're minimizing the touch points and the manual aspect of it, the easier it is, obviously, to scale that product up if you want to in the future, and kind of help out with the kind of ongoing expense of it. Challenges along the way, I would say, again, just don't underestimate the demand kind of for the product and the customer impact that you'll have to go through if you're a little too lax with some of the criteria up front, and that's kind of what we experienced a little bit was the need to tighten up on our eligibility criteria a little bit post-launch, and kind of what that looked like from a customer experience standpoint while we managed through it. So I would say just to try to take that into consideration up front.
Absolutely. Is there anything else, Nathan, Rainey, or Christian, you'd like to add to that as far as challenges have gone with launching or managing the product?
When we worked with QCash, they were just absolutely fabulous in helping us to navigate some of those challenges. Being a smaller credit union, we needed, their expertise. And so we just did a soft launch originally with a selected membership group to make sure that the entire process went smoothly for us.
Fantastic. And maybe, Kristen, what are some of the more common challenges that crop up, given that you're working with a much wider number of credit unions?
Yeah, so I would say really along with what Cody has mentioned and Rainey as well, but just working on product setup and underwriting setup and understanding the potential differences with that, and what the program can look like or should look like. I agree with Cody on setting up the product to be more conservative in the beginning, seeing what the membership base, what that looks like as far as member reception of the product and product performance, and then it's much easier to loosen the underwriting criteria as you go rather than tightening that back up. But I would say that's probably one of the challenges, is just determining product setup. Like Rainey said, we partner with our credit union clients on that and determine what seems to make the most sense for their specific situation and their membership demographic. This can be a bit different for credit unions. You know, it's a new product. It can be scary almost in some ways. There are different, rules and regulations associated with this. These products look different, and they typically perform different. So I think keeping that in mind and just coaching our credit union clients on that these products, they are different, but that's a good thing.
Thanks, Kristen. All right, I think we've maybe got time for one more question. So I'm going to do a sort of combination here too. There's a couple of questions I think around sort of some of the internal conversations that happen within your respective institutions. And so I think sort of the spirit of these questions is around the fact that you bringing through a product like a small dollar loan, especially if there isn't a similar one at the institution already, isn't always a solo effort. You have to bring sort of others with you on the journey. Maybe I'll ask you, Nathan, to address this, because I think we've talked about this before. What would you say to sort of banking professionals on the call today, those at credit unions, those at banks and other related institutions, about the internal conversations you had at your institution to bring through a product like this and have it launch?
Yeah, I think, well, it's taken into account kind of what I talked about earlier before about policy, first and foremost, especially on credit union side and bank side too. What does your governance structure look like? What is the risk tolerance that you have within your institution? And it comes down to an educational piece as well. I think with those stakeholders that are involved in helping to make the decision and clear a path for what small dollar loans can be. In terms of the standpoint of saying, okay, well, we've done our traditional underwriting, right? And then this is what it still looks like in terms of tolerance factors. I think I saw in their questions as well as, say, how long does a member have to be with the financial institution, with a credit union before they're eligible for a small dollar loan? So you have a lot of ability to customize, what does your relationship-based underwriting look like? Are you going to do this for a member that just opened an account? Maybe not, right? Maybe you're going to have them with you for 3 months? Is it going to be 2 months? What's that time frame that you're looking at for them to start that relationship and saying, okay, how much are you going to do in an approval standpoint? So piece of it is, saying, well, what's that conversation? What does our risk tolerance look like? And for us, again, it's kind of been, a standpoint of looking at the bigger picture of things, the overall relationship, and the small dollar loans is just a piece of that. In terms of saying, okay, how else can we help to really show our community that we're making an impact, we're making a difference? And this is a tremendous piece to be able to go out and do that and kind of, prove that we're not just saying that we want to make a difference. We're out here and actually doing something that says, okay, we're going to take a little bit more risk on this. We're going to show the benefit that we show in a relationship with our members. We're willing to lend to them in a different way, unique way that maybe not everybody else has been doing, because, we believe either in this product, we believe in the members that are coming through our door, and that difference that we want to provide to our local community in terms of those that are interacting with us. So if you're considering it and you're just saying, okay, well, I have, I'm taking into account risk, what's the risk of not doing it, right? So if you have those members or those customers that are saying, okay, I want to go this product, you also have the risk, if you're not taking that leap forward and saying, hey, I'm going to do this, they're going to choose somebody else that will be, or they're going to go for a higher cost alternative that might put them in a worst case position and make it harder for them to repay some other obligations that they already have with you. So there's two different ways to, I think, look at that risk picture. And from our side here at Minnequa Works, we want to be on the standpoint of showing how we're helping to make that impact and make that difference here, rather than them having to go somewhere else to look for that.
Absolutely. Well, it is, I think that's all we have time for today, folks. And I regretfully have to bring this conversation to a close. I know there's a bunch of questions that we didn't have time to get into. We've taken a note of those questions. Please feel free to also reach out to us if you'd like to be put in touch with anyone, or if you have some questions that you'd like us to address one-on-one. Before we sign off, again, I want to thank our panelists once again for honoring our invitation, for sharing some much needed perspective on their experience with small dollar loans. I think that it's really important for providers to share with other providers some of the experiences they've had in launching and delivering these loans. I want to thank also the Pew Charitable Trust for their ongoing support with our work on small dollar loans, and to the Colorado Office of Financial Empowerment, who've been just a wonderful partner. And then, of course, to all of you watching, thanks so much for your time and engagement over this lunchtime hour. Finally, we're really looking forward, as I've been saying throughout this conversation, to continuing our work on small dollar loans, to continuing some of these conversations. And I'm more than happy to meet with any attendees on a one-to-one basis. If you're bored of my voice, we're also happy to put you in touch with other stakeholders in the space, including potentially some of the panelists on the call. So please do feel free to reach out to us, and let's keep this conversation going. Thanks, folks, and have a wonderful afternoon.
Thank you so much.
Thank you.
Guys.
Bye.